Hey there, and thanks as always for tuning in to Bloom Financial. My name is LaShawn Banks. I am a certified public accountant, and I teach you how to pinch your pennies, stack your checks, and grow your income streams on the road to debt freedom. Yes. Having multiple bank accounts builds a strong foundation for budget management. Your budget should be simple. It should be flexible, and it should be complete. And when I say complete, it means it should be accurate, it should be whole. You should not be leaving a penny off of that budget. You just need to be honest with yourself, all right? And so to have a good budget and have a good budget management, you need to have clear line of sight to where exactly your money is going. For each income and expense item, you need to have a bank account that properly matches that expense or that income coming in, all right? Having multiple bank accounts allows you to be able to allocate your money according to how it's being used. So, on today's video, I'll be telling you how many bank accounts you should have, examples of bills, expenses, of income that should roll into these accounts, and I'll be giving you tips on managing these accounts because having multiple accounts can mean more work, but it doesn't have to. So, let's jump into it. Of course, basic housekeeping. If you like this video, please give it a thumbs up. Please subscribe to my channel, comment below, and take advantage of the link in my bio for a free 30-minute consultation for us to talk about your financial journey. Pick my brain. I'm all ears. So, having multiple accounts. The first account, the very first one that you need to create, which I'm sure you already have, you just need to label it for a specific purpose or specific use, would be an account for your bills. Yes, bills, y'all, all right? So your bills should account for no more than 50% of your income. I encourage you to go through and do this exercise with yourself or with your spouse to make sure that your bills are not over this 50%. If they are, start shaving some things off. So they may cause you to have to take some setbacks or some steps back, but at the end of the day, this bills account is for what you need, not what you want. Your needs to support your lifestyle. Some examples of things that go into your bills account would be your rent, it would be your car payment, it would be your car insurance, it would be your utilities, your cell phone bill. These are some examples of things that come out of your bills account. The next account that you need to have is a savings account. Down the road, I'll create a video for us to be able to dive into what we do with the savings account, whether we want to roll it to a CD or something else that earns higher interest. But for right now, having a regular savings account with 0.5% to 1% interest will do just the job, okay? So you'll create a savings account. 50% goes into your bills account, 20% goes into your savings. And you're like, what? 20% of my money? Yes, 20% of your money you should be saving. Sit on it. Do not touch it. I'll tell you what accounts you can touch, but your savings account, you should never, ever touch. When I meet with my clients, they always tell me like, hey, I got a savings, but always pull the money out. I have a savings, but always touch it. I have a savings, but there's always a but after the savings. I have a savings. It should be I have a savings and I have a bills account and I have an investment account. Okay, not a savings, but we are learning to remap and reprogram our way of thinking. We're learning to unlearn that toxic behavior that we have as it pertains to our finance, as it pertains to saving money. You're here, you're watching this video because you want to do better. So I'm just going to keep it a buck with you. Do not touch your savings account, all right? Put 20% in there and let it stay there. Meaning, let's say you earn $1,000 every 2 weeks. So of that $1,000 every 2 weeks, $200 needs to go into your savings account. That's $400 a month. That's $4,800 a year just by letting money sit into your savings account, of course, plus interest. The next account that you need to create is a miscellaneous spending account, which is everybody's favorite account because this is our lifestyle, right? These are the things that we want, not that we need in our bills account. These are our want. This is the manicures, this is the pedicures, the haircuts. This is the trip to the mall. These are vacations. This is our miscellaneous account. I'll back into how much you should be putting into your miscellaneous account after I go over the next one because it may just depend on where you are in life. The next account that you need to have is an investment account. Okay? It depends if you're a seasoned or a novice investor, but if you're watching this video, I assume you're a novice investor. With that being said, you need to have money set aside for investments, whether that's purchasing your first home, whether you're purchasing a second follow-up investment property, whether you're trying to move from one home to another, you maybe want to purchase a car, you may be wanting to put money into your business. There are different things that you may be wanting to do in terms of investment. It can be wanting to trading some stocks, some cryptocurrencies. You want to dump money into your investment account specifically for this purpose, especially if you're trading, right? You don't want to be trading your bills money. You don't want to be trading your savings. You want to be trading specifically what you have to invest, not a dollar over. And if you're saving to purchase a home and you're already speaking to a lender and you know how much you want and you know, okay, this is my first home, I'm probably going to have to put 3 to 5% down. All right, 3 to 5% times the cost of this house. Let me make sure I have this in my investment account sitting and I'm not touching it for any specified reason. All right, I said I was going to back into how much money you needed in your miscellaneous account, and that is because it depends on what season you're in with your investments. You may already have your home, you may already have some stocks that you're trading, and you may just feel like, okay, every month only needs to put maybe 5 to 10% inside of my investment account. So, okay, you got 50% for your bills, you got 20% for your savings. Let's say you put 10% in your investment account. That leaves you 20% of your income for miscellaneous spending, and that's all you got. Don't touch it, all right? And that's why you need a different account for each thing. I also highly recommend you getting a bank card specific to each account, with the exception of your investment and your savings account. I don't encourage you to have a bank card for those two accounts because you'll go and you'll swipe and you'll spend money that you have allocated for a specific use. But I will recommend you having a swipe or a debit card for your bills account and for your miscellaneous account. When you're leaving out, when you're hitting the mall, only take out money from this miscellaneous account. Only either take the bank card or leave the bank card home and just take cash out of that account. That way you're really on a budget in terms of what you need to spend. Okay. There are two optional accounts that are lifestyle dependent. And when I say lifestyle dependent, meaning this may or may not be you. It depends on your circumstance. It depends on how you file your taxes. If you're single, if you're married, you may or may not need these following accounts, all right? So one of the accounts is a business account, and the second one is a relationship account. All right, I'll start with the business account. You need to have an account specifically for your business expenses and your business income, right? When it's time to file your taxes and you want to claim those deductions, whether you're in a loss or whether you've made money, everybody wants to have as many deductions as you possibly can, right? The easiest way is to have a separate bank account that tracks your business expenses, that tracks how much you've made. Another reason is, let's say you want to apply for some funding or get a loan from the bank. They want to see, okay, where's your business bank account? Where's the paper trail for your business? You don't want to go pulling out your personal business account or your personal checking account. No, you want to pull out the bank statement for your business account only. So how does your business account get funded? Through your investment account, okay? So you've already put out your money according to the split of 100%. So then you take from your investment account and funnel that into your business. Why? Because your business is an investment. It's an investment in you. It's an investment in your future. So you take money from your investment account and throw that into your business. That's how your business account gets funneled, okay? Eventually, it gets funneled over having client retention, having income, having products being sold, having online courses. Whatever your niche is, that's how it goes. And I feel like my little baby's up. The last account that you're going to need to have will be your relationship account. Most couples that I know have at least one relationship account, and that's what I always advise my clients of, right? You want to start with at least one. You may want two, you may want three. You may decide, okay, we want to do investments together, so let's create a separate investment account. You may decide we want to do a savings together, so let's have a savings account together. But you need at least one account, and that one account will be for your combined bills. Let's say you're splitting the mortgage, you're splitting your rent, your utility bills, your gas, your electric. If you're on the same car insurance policy, which I would recommend considering it's cheaper to have you both on the same policy. Cell phone, if you're both on there, again, cheaper to have two lines versus just one. All right. So those are the type of things that you're going to split. So you would still do the same thing. You would still have your bills account, but you'll also have your relationship bills account. The two should still be less than 50%. The two of you should not be spending more than half of your income on things that you need to live, you know? You may need to cut back or create a more frugal lifestyle while you're in this phase of getting your budget management plan. So those are the accounts that you need to have. 4 main accounts and 2 optional accounts depending upon your lifestyle. Now let's quickly get into how you can manage these different accounts, because having multiple accounts can mean a few things. Those cons are overdraft fees and regular bank fees, and then also just having accounts open that you don't even use, all right? Because you may not be using your investment account, but you need to, to get to that phase of increasing your net worth. But that's a different conversation for a different day, all right? So those are a couple of the cons. So let's talk about how we can negate those, or how we can work around those. So first of all, let's talk about fees. Having multiple bank accounts, you need to be cautious of where you open your banks up, what institution you decide to go with, I should say, all right? One thing I would recommend is working with an online only bank, especially when it comes to your savings and your investment accounts, because you shouldn't be going into the accounts, you shouldn't be going into the bank to do much with these accounts anyway. So having an online only bank, and I'll put some recommendations below, really cuts down on a lot. They have less fees when you go to these online banks, and most of them don't really require you to have much of a minimum balance. So it also helps with overdraft fees and with the regular merchant bank fees that they charge, all right? So you want to be cautious of that. When it comes to your business bank account, you especially want to be cautious because they often charge you fees for like creating ACHs when you need to pay your vendors, or you're paying your vendors via wire. They charge you fees for that. So make sure you're doing your due diligence and your research when you're finding bank accounts. Hi! They'll hit you with every fee in the world. So make sure that you're doing your research, and make sure that you look for online only banking when it comes to your savings and your investment. My last tip to negate some of the fees and the riffraff that comes with having multiple bank accounts is having on your alerts. Having on your alerts is like a lifesaver, right? Because oftentimes you can turn on alerts for like minimum balance alerts. Let's say your balance is getting low, you go to your bills that I told you about earlier. You need to be looking to your bills. For each bill, you should have a date that it comes out of your account. Okay, this is coming out on the 15th. Here's the 12th, and I only have $50 in my bills account. I may get paid on the 14th, but let me make sure things are going to flow correctly. Maybe I need to push back the date. Maybe I need to turn off auto pay until I get paid on the 15th to make sure, everything works out and it maps out correct. Thanks as always for tuning in to Bloom Financial. I am always so happy and so grateful to share tips with you when it comes to pinching your pennies, stacking your checks, and growing your income streams on the road to debt freedom. Please like this video, please subscribe to the channel, and please share it with a friend or family that you feel like maybe they could get on the right track or the right page finally when it comes to managing their finances.